On today's episode, we are going to take a look at 3 stocks that have made some crazy moves today. They are all down from their all-time highs. So like always, we're going to try to understand what they do, take a look at the recent news, some fundamentals, and my overall thoughts. If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up and tune in to the stream where I take a look at stocks you want me to look at. So let's get started. But before we begin, let's take a listen to today's sponsor. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. Alright, so the first stock we're going to take a look at is one I haven't really talked about in a long time. This is going to be Virgin Galactic. It's traded under the New York Stock Exchange as ticker SPCE. Right now it's sitting at $23.06 and it is down 13.63% for the day with the market cap of $5.46 billion. But from its all-time high, this stock has pulled back a nice amount. It has pulled back about 61%. It's insane. But if we take a look at it compared to the past year, it is still up 26%. So it still has been doing great for early investors. All right, so first I want to take a look at why this stock dropped. And the main reason is the CEO, Richard Branson, ended up selling some shares. Right, and this isn't the first time we've had some big players sold out, right? This time was the CEO. But earlier last month, we had the chairman, Chamath, sell off some stake as well. So normally, right, when insiders sell stocks, a lot of people get bearish on it, right? I mean, it's understandable, right? You're wondering, hey, why are insiders selling? Is there a reason? Is the company going to go down under? Normally, there can be multiple reasons for an insider to sell. I understand the bearish case behind it, but I don't think it's always as simple as that. So the great thing is that a spokesperson came out and mentioned what was the reason for the sell-off, right? That's great because it kind of helps clear the investor's mind and should, in theory, help out with the panic. The main reason for this sale is because Branson wants to use this money, the proceeds he gets from here, to help out his other businesses, right? He has other businesses out there. Some of them are very big in the overall global leisure and travel business, in the hotel business, and those have been taking a hit right now. So, I mean, if you're a business person, it actually makes sense if one of your companies is valued really good right now to take out some of that money to help out some of your other businesses, especially, right? It's not like it's the company itself doing a public offering and selling shares. It's the CEO who owns some shares of the company and wants to use that money to help out its other businesses. I think regardless, as a business, that's a great move. Again, I can see why investors are kind of worried and why there might be some fear around it. To me, I don't think this is a bad deal at all. It is to be expected. He wants to make sure his other companies survive. Now let's take a closer look at Virgin Galactic. Virgin Galactic, right now, I want to say it's more of a speculative play, right? It's a company that, and when I mean speculative play, that's usually what I call a company that has no real revenue right now. And once they create their product, once they create their service, which is a few years from now, that's when we're going to start seeing some returns on the company. And that's exactly where Virgin Galactic is at right now. So I just wanted to take a look at their most recent quarter. Their most recent quarter, they mentioned they still had a very, very strong cash position, which is great news. Next, they are targeting to do another flight on May 2021. And they're still reaffirming their second and third space flight from Spaceport America, including one of those flights is going to have the CEO inside of it. So things are progressing for Virgin Galactic right now. Some other recent news: on March 30th of 2021, Virgin Galactic unveils the VSS Imagine, and this is their first Spaceship 3 in its growing fleet, and manufacturing right now ramps up on the next Spaceship 3 in the fleet, which is going to be VSS Inspire. So now let's take a quick look at some fundamentals for Virgin Galactic. First, we can see this company is not really expected to make any true revenue changes until about 2023 and then 2024. So like I mentioned, very, very high speculative play. On average, analysts believe this company's revenue will grow about 52.4 for the next 3 to 5 years. So high growth stock if they're able to achieve what they want to do, and analysts are behind it. If we take a look at their financial health, like I mentioned, they have strong amount of cash compared to no debt to their name. So even though right now they are kind of burning a bit of cash, they will be able to kind of supplement that with the amount of cash they have on their balance sheet. Now, if we take a look at analysts, there's about 10 analysts looking at this company. 6 give it a hold, 4 give it a buy, 0 actually give it a sell. The average price for the next 12 months is about $36.60. That's actually a 36.16% increase from current prices right now. So we can see analysts are very, very bullish for the company. I do believe the closer we get to that revenue segment of Virgin Galactic, the higher the stock price is going to be. I think right now it's just very, very volatile based on just so many news that come in and out about the company. The second stock we're going to take a look at today is actually up for the day. Today it is up 5.6%, and this is AMD. It is currently traded on the NASDAQ as ticker AMD. Right now, like I mentioned, it is up about 5.6%. But if we take a look from its all-time highs in the past year, it is down about 14%. So it's definitely seen a nice pullback. It currently has a market cap of about $100.8 billion. So the main reason the stock price is jumping today is an analyst gave it an outperform with a $100 price target for the next 12 months, right? And that's some great returns if AMD can do that. That's over a 20% return from where those numbers are at right now. So we can see big bull on AMD, and we can see they are doing great products. Most recently, on April 7th, AMD let us know that AMD and both Silenex stockholders are overwhelmingly approved the acquisition. So that's going to move forward. That's going to help AMD grab into that FPGA market. And the FPGA market is one that a few tech investors believe is going to be a great play in the future. Some other recent news: on March 16th, AMD brought their new AMD Pro 500 series mobile processors to laptops. Next, on March 15th, AMD released their new EPYC series, which is the 7003 series, and it's a whole new level for their highest performance server processor. Finally, on March 3rd, they did release a new graphics card, the RX 6700. If we take a look at their most recent earnings, which they gave us on January 26th, quarterly revenue was up 53% compared to the same time last year. Full year revenue was $9.7 billion, and it was up 45% compared to the same time last year. And the company was profitable in net income, which is great news for investors. If we take a look at fundamentals, analysts believe this company will grow 16% on average for the next 3 to 5 years. Pretty bullish, a nice hyper growth stock. Like I mentioned, they are profitable and they are positive in cash flow from operations. If we take a look at their balance sheet is looking good. You can see right here, their equity is increasing as their debt is decreasing. They have a nice amount of cash, about $2.3 billion, and about less than $400 million in debt. If we take a look at analysts, there's about 19 checking out AMD right now, 13 give it a buy, 5 give it a hold, 1 actually gives it a sell. Boo. Right now, out of the 19, the average price is $104. So right now, that's a 32.96% compared to where the current prices are right now. So we can see big bullish on AMD right now. The final company we're going to take a look at is Lucid Motors. This one, many might consider a speculative play, but I think this is closer to being a real business and really putting its name here in the EV market. So right now, Lucid is trading under the Spac CCIV. The merger hasn't happened yet, and it's currently sitting at $20.12. Today, it was actually down about 7.4%, and there was no real news. I think right now there's just so many companies out there that there's not enough buyers for every company. Spacs, I feel, got hit big. We saw it with Virgin Galactic. We're seeing it here with Churchill. Another thing is just maybe some investors might be trying to leave the EV market right now as we have the semiconductor chip shortage happening, that maybe investors might be willing to sell out of Lucid right now and kind of open up a position somewhere else. From its all-time high, the stock has definitely pulled back a nice amount, almost 65%. If you like this at $57, you have to love this at $20.12. In theory, there has been no fundamental changes on the company. The one thing I really like about Lucid is that there's so many EV companies out there, right? And all these EV companies have some form of car or have some type of product that they're going to release in the next few years. Lucid is actually going to release their product later this year, and it's not like the product isn't being made. Lucid has plenty of manufacturing right now. They have a manufacturing facility that allows them to make these cars. So I do think, like I said, Lucid, some people might consider a very speculative play. I think it's a little closer to being a real business. When I say real business, like a company that's actually making revenue from its product, compared to like Space, right? Space is further ahead. The reason I say this is, right, you can check out Lucid Motors' YouTube page, and just in the past few days, in the past few weeks, they've been very aggressive. 2 weeks ago, they showed how the plant is going on for Lucid Motors and how they're producing the Lucid Air. On a week ago, the CEO took a test drive in New York City. It was actually a nice video if you want to check it out. All these videos are pretty short, about less than 5 minutes long, and they're actually pretty entertaining. So the CEO took a drive through New York City last week, and yesterday they kind of showed cold weather testing of Lucid Air. So it shows that, hey, they're almost ready. I mean, all these tests are pretty much the end game, the end run for the final production, and before they start delivering the products to the customers. So right now, there are no analysts taking a look at Lucid Motors or CCIV. I feel like because it still hasn't even gone through the merger, so analysts are going to be like, why should I even look at it right now? So these are 3 stocks that moved pretty penny today, and they're also pretty down from their all-time highs. Now my overall thoughts. All right, so let's see if I put them all in a portfolio, how would I rate them? My number 1 position in here would obviously have to be AMD. AMD is a growth stock. It's semiconductor, a company I'm super familiar with and super comfortable owning. They're seeing high revenue growth. They're expected to continue that revenue growth as well. They are profitable. I don't know if I mentioned that, and they are positive in cash flow from operations with a strong balance sheet. The acquisition of Silenex is gonna make them a strong player in the FPGA market as well. So AMD in my portfolio, it would be like a tier 2 stock. Then next on the list, to my surprise, it would actually be Lucid Motors. So Lucid Motors is hitting the EV market, right? It is down a nice amount. The reason I think I would prefer Lucid Motor over Virgin Galactic is because Lucid Motor, like I mentioned, is closer to being a real company. And by a real company, I mean a company that is going to have revenues pretty soon out of its products. This is one of the few EV companies that's publicly right now that is actually making some products, right? There's only a few pure EV plays at the moment, and I think Lucid Motors might actually be a nice play to do. Lucid Motors in my portfolio even though it would be the second here, it would only be a tier 3 stock. And by tier 3 stock, I mean it would be one with a very, very small position in my portfolio. Lucid Motors is not one that I personally would go a lot in. Third would be Virgin Galactic, and the reason Virgin Galactic is last is because this one is a high speculative play, right? There is no form of revenue coming anytime soon. There's still so many tests this company needs to accomplish before even making a dime. So this is very similar to Lucid Motors. It's gonna be a tier 3 stock, but I think it would actually even be smaller than Lucid Motors. So I hope you guys enjoyed today's episode. Like always, make sure to subscribe, make sure to hit the thumbs up. Take care and have a good night.